For the Lord God is my strength and my song, and he has become my salvation. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the crown of life, which God has promised to those who love him. Philippians chapter 4, verses 6 to 8. Do not be anxious about anything, but in everything by prayer and supplication with thanksgiving, let your requests be made known to God. And the peace of God, which surpasses all understanding, will guard your hearts and your minds in Christ Jesus.
Yo, good morning, everybody. Oh, man. Hopefully that wasn't too loud. Hopefully y'all are doing well and having a good weekend so far. As always, we got a lot to go over. Hopefully you guys had a good week last week. Pretty crazy week for a lot of people. But I had some comments in my private group saying that, they haven't really seen people being happy or excited at the end of an FOMC or NFP week, which was pretty interesting. But yeah, hopefully you guys had a safe, productive week. And as always, today we're going to be going over, a good amount of things. Top-down analysis, answer questions, go through bonds, yields, currencies, gold, indices, and yeah, pretty much GBP, USD, Euro USD, and just kind of outline the whole entire process of, starting a week, right? You guys, for the most part that are here, probably know that by now. Hopefully this year has been productive. Hopefully you guys have learned a lot with the time you've spent here, because, it's been a lot of good things I've been seeing. So I'm grateful that a lot of you guys are listening to what is taught here, because it does wonders. And at this point, it's undeniable, right? So yeah, first and foremost, as we always do, we got to start with the news. So Sunday, there's no news, obviously. Sunday, Monday, generally is accumulation manipulation. Sometimes that bleeds into Tuesday, especially if there's like a news event like this or like a news schedule like this. But generally Tuesday, Wednesday is the expansion of the week, creates the high or the low of the week 70% of the time. And then Thursday, Friday, if we hit a higher time frame liquidity pool, or if we hit a different PD array, we could end up seeing, some type of reversal take place, right? So yeah, can you guys see everything okay? Hear everything okay? Just let me know in the chat. It's always something I can't verify because YouTube is dumb for some reason, in some ways. Okay, Fritz said, yeah. All right, cool. So yeah, looking at the news, we have light news on Monday. We do got an orange folder here. So, we're going to see what the response will be from that. Something you do have to consider. This is a yellow folder, right? These FOMC speakers are yellow folders for whatever reason. But you'll notice that when we have those yellow folders, things can pop off. Like last week, there was a huge decline. Last Friday was a huge decline while these people were talking, right? And this has to do with many things. It has to do with commerce, has to do with the economy, right? The outlook. And then, of course, expectations Sometimes there's inflation conversations about this stuff or within these meetings. So even though they're yellow folders, you still want to make sure that you're aware of them. And, you don't want to be blindsided because you're just looking at the orange and red. Some of them are hidden, right? At least that's what I've discovered. And based on what ICT talked about these specific FOMC news events, I heard him on one of his videos, I think early in the year, where he was talking about how FOMC is present. And I didn't see an FOMC, right? I didn't see anything related to FOMC because I have my filters on, basically just looking at orange and red folders. And then I turn the yellow folders on and I see if there's FOMC. So he even brought it up. So I'm making sure that I relay that message to you guys so you don't get blindsided at some point, because, they're hidden, right? But they do say FOMC. So anything related to FOMC is, or NFP or CPI, or inflation, right? CPI, that stuff could be pretty dynamic, right? So yeah, again, we have very light news for Monday, nothing on Sunday. So we're going to assume that that's going to be a calm couple days, Sunday, Monday. Maybe it does something exciting, but we'll see how it wants to deliver. I'd prefer to use this as an intel gathering day. We're ahead of some type of, what's non-farm payroll? That's interesting. There's been 2 of them, actually. There's been 2 NFPs this month, if I'm not mistaken. It's the FOMC. Yeah. Yeah, that's so strange. There's an NFP right there. There's an FOMC, federal fund rate. And now we got another NFP. Very, very interesting. I don't think I've ever seen that before, where there's 2 NFPs. But with that being the case, we're going to treat this just like an NFP week then. I didn't notice that it was like that. So, be cautious, cut your risk. From when November started, we already cut our risk in half. So it's not going to be any different this week, especially because there's another NFP, the second one pretty much. I think they're trying to make up for the time that was lost during the government shutdown. So yeah, that probably explains why there's 2 non-farm payrolls taking place. There's one early and then there's one right now. So again, all your risk should be cut by half. It shouldn't be anything dramatic. Think of Power 3. We did see a very dramatic drop in the indices. So we'll get more into detail on that when we get to the chart. Then we got CPI as well. So we got NFP style stuff, FOMC, and CPI. So this week is going to be very dramatic, right? Not sure what style of dramatic it's going to be. We're going to have to find out. But there is nuclear bombs sitting right in the middle or scattered throughout the week, right? Tuesday, Wednesday, Thursday, and Friday is going to be probably a little bit more of a light type of trading day. But we'll see what happens, right? We'll see what happens. But think of Power 3 always. Tuesday is going to be pretty dramatic because it's NFP and FOMC type stuff and CPI. We got to see how this response is going to be. Depending on how aggressive this response is, that'll most likely have an impact on how accelerated this will be. CPI is a one-stage news event. So basically it, right when the announcement comes out, it rages towards the level. NFP or FOMC, that is basically red folders, they're more of a 2-stage event. So the first one may be a little bit fake or displaced to some liquidity pool against the narrative, and then it'll come back against it generally. So you got to keep those things in mind as we walk through this week. Highly risky week, very much not a week that, or very much so, not a week that you should push too hard, try to pass funded accounts, over leverage, over trade. You should never be doing that stuff anyway. But on weeks like this, in a month like this, at the end of the year, it's even more important that you limit yourself a little bit, or a little bit, especially if you're just getting started, still trying to figure out the process, and trying to find yourself, right? So yeah, that's essentially the news. We will be definitely keeping an eye on the FOMC announcements when they come out. There's a lot of busyness happening, so we'll see what that turns into given the big drop in the NASDAQ and the indices in general. All right, so yeah, with that being said, we'll move on to the bonds. So we can see that the bonds have declined, right? We pointed out these levels in here. We wanted to see what the response would be from this fair value gap. And then we're also, as you could see inside that weekly fair value gap I was mentioning since last week, for weeks, right? And it's clearly been using the 25%, 50%, and then now we got the 75% that's kind of smashed through. And then that 75% was basically in line with this little fair value gap in here on the daily. Right, so if we move to the weekly chart, you can also see, let's move this. You can also see this here. I think we have basically we've moved past that. So let's move this one here. Roll with the punches, right? Oh, let me click that one. Oh, there we go. So yeah, this is a pretty solid displacement. If you're thinking like this was the 5-minute chart, this would be pretty telling. We now have, it's close enough, right? We now have this breaker in here. So we will be monitoring that to see how that will hold price or not hold price. I think it will hold price. And if this is the case, if we do continue this rampage to the downside, which in my opinion has had a pretty heavy impact on the indices, I think the closure of the year, the cap of the yearly candle, I believe that is unfolding. So I don't believe there's going to be new all-time highs. Maybe it gives another rally up at some point, but for the moment, even if it does go up, we're going to have to break through this level, this breaker here, in order for us to try to target things like the buy side up here, right? The wick, the high, this high, so on and so forth. So my attention, given the fact that we have just slid through aggressively, goes directly to this wick here. We have the quadrants of that wick. We are trading inside of, let me see, is that an order block? Yeah, it's an order block right there. The 50% is here. I think we actually closed below it, if I'm not mistaken. Let's actually measure that. Yeah, prices closed below the 50% of that order block body. So I think it's going to require a lot for us to get beyond that. So, there's this fair value gap here, so it may not have to come back to the breaker. So we do want to keep tabs on the 50% of this for the bonds. And again, this has a positive correlation to the indices. So if this goes lower, the indices are going to be influenced by what's happening here. This was these 3 assets in here, especially the 30-year, were starting their decline sooner than the NASDAQ and the indices were falling. So before they were falling, this was already tanking, right? So eventually things get back in line with correlation, and we could see that that's basically been the case. This continued to accelerate. NASDAQ and the indices rallied up, the Dow especially rallied up, and ended up turning around, right? So of course we'll look into more of what happened there, but this I think had a pretty heavy impact. Of course, we had a rate cut last week, and generally that's a bullish indication, or it's positive for the stock market, positive for businesses borrowing money. So, generally has a positive outlook, right? When that type of stuff happens, especially if we're near all-time highs. But, you know, it could be simply manipulating. But obviously, we're going to have to wait and see and just go off what price is giving us. And so far, if this keeps going, right, unless this thing breaks back above this weekly fair value gap in here and gets up here, I'm going to still look to try to see if we can't target the wick down here, at least one of the levels, right? Whether it's the beginning of it, the 75.50, or even, all the way down to the low if it gets real excited. This is trendline liquidity here. So there's built up liquidity. We have a shift in market structure, multiple PD arrays violated, more than 3. So if we're trying to force buys in this scenario, that's a problem. You're trying to be right. And we need to go with what the market's telling us, not make decisions based on if we think we're right or not. What's the market telling us systematically? Then we follow that and make a decision based on that. Okay. I do believe that we should be able to go down here. If it does rally up, this has been a pretty exaggerated expansion. We have this high to that low. So relative to this, if there was to be like a fractal low that forms here of some kind, maybe it starts a little reversal. We have equilibrium up here. A premium is well above here, right? And of course, we have the breaker candle, right? Low, high, lower, low. And then we have the weekly fair value gap. So all these levels have to be broken for us to get back in line with a trustworthy rally to the buy side for the bonds. Okay, so my attention is going to be, at least for the moment, down here, right? Maybe it gives a little retracement, but unless this is taken, my focus is down here. And I still allocate the flexibility for this to, retrace a little bit, because you got to think power 3. So there'd be nothing really wrong with that. Ideally, I'd actually like to see us attempt and then fail and then decline, because it'd be even more trustworthy, because then, there'd be multiple things in place. Right. For now, though, this is enough evidence for me to believe that we're probably going to end up tanking or continue to tank. And we got the low here, right? It's that wick. That weekly wick is also a monthly wick. So you can see that there. So we have time frame confluence with the PD arrays, with this wick specifically. So yeah. And if that keeps happening, we may see an even deeper decline in the indices, a deeper decline in the foreign currencies, and a continued strong rally in the DXY, right? Or it should turn around on the DXY if that's the case. But you could see that, there's cracking correlation overall. So it's typical for December, typical for, November, December, January to have a correlation issue. And I made that clear going into November that that's going to be something that may be taking place. And you can see that it's manifested. It does every year around this time. Okay. So yeah. Is there anything else? There is a monthly bullish order block here, so we'll have to see how that reacts. But this is a pretty dramatic decline, right? And a closure below the 50% of this is, it's got the same validity as the weekly order block I pointed out, 50% being violated. So we got multi-time frame confluence, like I said, for levels being violated to the downside. And this is a huge decline. So trying to buy into that is picking a bottom, right? So we have to wait and let it get up here and confirm. Again, otherwise, we will be continuing to see if we can't get down here, whether that opens up, does a rally first, rejects, then goes down, or if it just opens up, maybe does a slight run, like a little wick real quick, and then just keeps rampaging. Either way, either scenario, I'm looking at this moment to favor levels like this being targeted. Simply levels like this. Am I worried about all this? No. Are we considering this as trendline liquidity? Yes. Could it get down there? Yes. But am I going to force that upon price right now when I have earlier targets to reach for? No. Okay, so these are going to be my focus for the 10-year. We have this fair value gap. So we definitely want to see how that holds up. If it gets beyond that, if it gets above that, we have previous week's highs to target. But the 30-year, which is this market right here, the 30 years it's more weighty, right? So these are subservient to the 30-year, but they all move very similarly. Just like how the S&P, the NASDAQ and the Dow are correlated, but the S&P is more of a weighted asset, right? So if in correlated assets, if the one that has more weight, like the S&P has 500 stocks, the NASDAQ has 100, and US 30 or the Dow Jones has only 30 stocks. So it's going to be more meaningful if we see that S&P is declining while the other two may be rallying for the moment. The S&P will influence the other two because it's more of a weighty asset across the three to go lower, right? Same is true if it's going higher and the other two are going lower for a short time, right? The S&P will drag it into correlation, right? So, or at least that's how you could look at it, right? So yeah, that's very similar with this, right? The 30, 10, and 5-year. So again, we'll see what happens. This is basically all I have for this asset. Let me go look at the chat. Would you say that we're around equilibrium on 30 years? 30-year current yield. So, I mean, yeah, I guess you could say that about this. This is too aggressive, in my opinion. In order for us to consider that that's the case, we're going to have to see a reaction from this monthly bullish order block, right? So that could be the case. We'll see. But when we're looking at this weekly chart, I mean, that's pretty dramatic, right? We're going to have to, again, wait to see price get back in line with buy-side delivery by taking out a couple of PD arrays, changing the state of delivery at least above this down candle. That'd be like the first sign that, we may be turning, especially if it doesn't go any further than this monthly bullish order block 50% level, right? So that's how I would kind of treat that. This is a very aggressive run, so we'll have to just wait and see what happens with this. Yeah, I wouldn't be surprised if that happens, Fritz. If it has a potential consolidation in that area. Of course, if it did do that and we're at equilibrium from the low extreme to the high extreme, you can also see that it's accumulating potentially with the rate cut as context, which generally leads to bullishness because rate cuts should drop the yields. Generally, they're dropping the rate of yield that happens with this market, right? So the rate cuts impact this specific percentage. They're cutting the yield on this percentage, meaning they're cutting how much interest is afforded to the bonds, which also has an impact on many other things like mortgage rates and all that, right? So yeah, so that's I wouldn't say that you're wrong in thinking that, Fritz. It's definitely something to consider, for sure. Daily chart also looks like a sell-side market maker. So yeah, I wouldn't be surprised, right? This right here being a market maker sell model. This low to the high, breaking down below this low here, that was a market maker sell model. This run up to go lower was a market maker sell model. And we may end up, having those market maker sell models working inside of this larger one potentially, if we do end up getting down to this level down here. All right, so we'll have to just wait and see. Right, but for now, none of this is screaming to us to buy. Right, we're seeing that breakers are holding on those upper time frames. We're seeing that bullish PD arrays like this fair value gap is being violated. We're seeing lows continuously be broken, highs continuously being left available. So, there's not a lot for us to go off of to force upon this market buy positions, right? But yeah, you marked this off. So we're a little bit beyond equilibrium, actually, if we go from this low to that high. So yeah, we're a little bit beyond equilibrium, actually. So if it does consolidate, I wouldn't be surprised if it's accumulating in this level, maybe building in the strong support level, trying to get people to pick a bottom, and then maybe it falls below this, taking this out. So yeah, regardless, unless something changes, that's going to be my opinion on this asset. So hopefully all that makes sense. Moving on to the yields. If that's what we're assuming on the bonds, the yields do the opposite. I've been talking about this trendline liquidity up here for weeks at this point. Here, let me make this bigger. So yeah, I've been talking about the trendline liquidity here for a while. If we move up, let's kind of just look around. So we could see that this did in fact go from this low to that high, simply came down, targeted equilibrium, targeted a weekly bullish order block, hit that, and then it's responded off of that. And it created this little signature in here, which is something very important to see. The relationship to the wicks, also the fact that it's a fractal low. This is definitely something that is a very powerful confirmation that price would turn around, whether it's just a small retracement or something that's in a mode of continuation. If you see this type of pattern in here, specifically with the characteristics of the wicks and a swing low, especially on like the daily or higher time frames, it's pretty significant. It's also fractal, so it can happen on lower time frames too. Those of you in my private group know we've been talking about that recently. But yeah, very important. And again, we're just blasting through PD arrays. The down candle here, the wick, we were watching that as it stayed below it. We can now see that this monthly fair value gap that we pointed out has basically held as support, turned to an inversion or a reclaimed bullish fair value gap. And it's pretty significant. It's holding up, right? So unless something breaks down below these levels again, from this point, breaking down below these down candles, taking out this fair value gap, inverting this fair value gap, and then breaking down below this low, overall, at this moment, price seems like it's still rallying and it may continue. And the logical targets to potentially aim at are up here, right? And again, we have this bullish order block here. Beautiful respect to that. And we could see the wicks being respected. We got this big wick here on the monthly being respected, right? So nothing in here is telling us that it's going to go lower. And if that's the case, the DXY may eventually turn around and start giving us a rally at some point. Because again, this positively impacts the DXY. The other asset positively impacts the foreign currencies and the indices, right? And that's why they're so important. That's why we spend so much time on them every week. And you guys, that have been with me for a while or have been doing this study, you've been able to see for yourself. You got to take my word for it. It just works. It's just the way it is, So that's why we start here. So again, unless this level's violated, I would say that if it breaks through the 50% of this, we could classify that as something to be concerned about in terms of targeting this low and invalidating the bullishness. But again, unless that happens, this simply looks like it's just a rally retracement to then go higher and potentially try to target these trendline liquidity highs up here on this higher time frame. And especially if we invert this weekly fair value gap. Let me see, did it fill in the whole thing? Kind of put that in the wrong place. And so it's almost completed the overlap of that fair value gap. If it gets above it, comes back down into it and touches it, I would assume that as long as it stays above the 50% of this, that's a balanced price range. And then price should continue. And then again, we have our target up there to reach for. And each of these daily highs becomes a liquidity pull to target. So yeah, it's going to be kind of my opinion on this. I don't think there's really much more we have to discuss about this asset. And again, there's a Kraken correlation going on, okay, with the DXY. The DXY and the indices are dropping for whatever reason together, while the bonds and yields are having their reverse correlated effect. But things are just not correlated as much as we'd like. And again, that's something typical for this time of the year. That's why from November to January, you need to cut your risk and be responsible, right? Don't hurt yourself going into the end of the year. There's no need to do so. And don't hurt yourself at the start of the year next year. We have a lot of time, so don't be in a rush. Let price come to you. Don't force yourself upon the market. Let it come to you. Let it get outside of this fair value gap, come back down into it, prove that it wants to support that, and then start to push away, right? Don't start assuming that this is a high. Now, if it, again, breaks down from this high, respects this and doesn't invert this level, and then gets down below this low, breaking down below the 50% of this, basically breaching this fair value gap in here, I mean, you could start to consider that it could go lower. But for now, we're not going to pick a top, and we're going to just continue to roll with this, moving where it's going, right? It's already changed the state of delivery twice, right? Broke multiple down candles to the upside, and now it's pushing into this level, right? So again, if it stays above the 50% of this, that's ideal. And then, maybe wicks into it and then tries to get up above this high and then go towards these levels up here. That's what we'd ideally want to see. But of course, we always have to have a contingency plan just in case, right? And so if it does break down below this level in here, that'll be my buy side invalidation or bullish invalidation. Okay. So that is my opinion on this asset. And if we go pull these charts up, we got very similar things happening here as well. Again, it's more dramatic on the 30-year for whatever reason. But yeah, we'll continue to see if it wants to keep this up. All right. But yeah, so that's my opinion on these two. Going through the weekly order block. Was it market bullish? Yeah, so it literally broke above this. This is a change in state of delivery from that weekly chart. Right? 3-week. It's a 3-week order block. So that's a change in the state of delivery. And this here too was a dramatic reaction to that weekly bullish order block. So yeah, it's going to have to break down below these levels. That's why I said this level down here is an invalidation. You could see what that correlates to as well as we move up in time frames, because we could kind of visualize the higher time frame charts when we're on like a lower time frame. Over time, you start to develop an understanding of, what the higher time frame looks like without even flipping to it, right? Because we just do it so much. And a lot of times you see the lineup like that, right? And again, we have wicks here. We have the order block here. We have this monthly fair value gap in there, right? So lots of things supporting price going higher unless it was to react aggressively from this, not overtake this and get outside of it to the buy side, and then breaks down maybe below this low here, basically coming back down below the weekly fair value gap in here, using it as resistance, breaking a low here on the daily chart, and then just displacing, right? That changes the story, and then we're fully confirmed that it's going to go lower if it was to break down below this level here, right? Because that's an order block, and we got all these other levels overlapped from this higher time frame. All right, so that is my view on this. So if this keeps going higher and the bonds keep going lower, that is bearish for the indices. And one of the assets are lying right now, either the DXY or the indices, and I think it's the DXY that's lying to us right now because it's going to follow the yields at some point, unless, there's something that, we're unaware of that's happening that is impacting both the indices and the DXY, basically the US assets. I'm not too sure what headlines could be promoting that, right? I do think that this is also just part of the yearly Power 3, basically capping the yearly candle. We are literally a day or two before the quarterly rollover. So that's another reason why you need to cut your risk. Not only the Kraken correlation, not only the time of year, but we're also at the end of the fourth quarter, which is going to be either, let me actually go to, go to bar chart real quick. Go over here to the NASDAQ. And what we're looking at to confirm that a new quarter has begun, we have to look at the open interest. Okay. And wherever the open interest shows, like whichever contract shows the higher open interest, that's when you know that you have to now change your contract month, and that we're officially starting the next quarter. You could see that the March contract of next year, the first quarter, the first contract month of the next year, it's catching up, right? They're rapidly catching up. So if we go to the Dow, so again, we're not quite there yet. So that means that the volume is still mainly in the December contract of 2025. Okay. So until this changes, you're still using the December contract. We're still in the fourth quarter of 2025. So it's either going to be tomorrow that changes, the 16th, 17th, or the 18th. It can go as far as the 18th. But it just really depends on when money's moved, when the big players move, and yeah. So that's how you determine if we're in a new quarter or not. And so far, we're not in a new quarter yet. Okay. So yeah, hopefully all this makes sense. Here, let me screenshot this real quick. Post it to the group. Sorry, give me 1 second. Appreciate y'all hopping on as always. You guys know, you guys are here every week, and yeah, it's been a pretty spectacular clinic we've put on this year, huh? It's been pretty impressive. And hopefully next year we can have more success stories. Been quite a bit this year, which I am very grateful for. Mike, I don't know if Mike's here, but he literally just withdrew $2,500 in December, right? So, Fred said these calls are a big part of my prep. Yeah, perfect. That's kind of what they're supposed to be used for, and of course, learning and asking questions and whatnot. But I definitely make it a point to come out here and try to prepare you guys. So yeah, moving on to the DXY. We have, again, this huge decline. We did call this out before it happened. I said it wouldn't go beyond the 50% here. It went up a little bit, but then look what happened. It just tanked, So again, we called this ahead of time. Yeah, I pointed to it in the free group, the free Discord, but we literally walked this day by day, in my private group, So everything that we show is obviously, publicly talked about, but then again, it's also even more deeply explained in the private group, because we're live every day, literally every single day, right? And they could attest to that. I don't think I've missed one day this year, even when I'm sick, because there's always something to talk about. The markets don't sleep. And, it doesn't mean that we're trading every single day, right? It doesn't mean I'm pushing everyone to execute every day, but there is something to do every day. And if you're a trader and you're going to make this your life, The laptop lifestyle where you spend like 20 minutes a day and then you get to drive a Lambo, that's not the reality. It's a lot of work. You got to stay locked in, because if you're not, and you don't practice and you don't study and you don't do what the professionals do, you are not going to get professional results. Like if you don't study, if you think back testing is boring, if you can't deal with it and find enjoyment in it, it's not something that you should be forcing yourself to do, because you're not going to get the results you want because you don't have a passion for it. But if you have no problem getting up every day, at least spending 20 minutes or more looking through things and watching a video to study and reflecting on your week, reflecting on your day, reflecting on your psychology, trying to learn ways to improve, getting around people that are, where you want to be, you're going to have a hard time succeeding and making progress if these aren't things that you're looking to do. This is obviously a solo sport, but, even though it's a lonely career, lonely industry, there's still benefits in getting with people that actually know what they're doing, that aren't here trying to make you think about Lambos every 5 minutes, that aren't, trying to make you subservient to them, because that's not what I do. I try to teach you guys to do this on your own, and then you guys hang out to hang out, and everyone learns. Everyone's been growing, passing funded accounts, getting withdrawals, which has been pretty spectacular this year. I mean, there's been more people pulling profits this year than ever, because a lot of students have been with me for a little bit over a year. But even some that have only been with me for a little bit. Mike hasn't been with me all year. Michael, I don't know if he's here. Mike Koza in the chat. Not sure if he's still here, but he's only been with me maybe less than 6 months, maybe more, maybe less. Mike, if you're in the chat, let me know exactly. But he's basically been here this year, and he literally at this point, after spending time with the private group, after spending time with us live every single day, not only me, right? The group, we have like a ton of good traders in the group that are open to helping each other and holding each other accountable. But as a result of getting around the right people, getting pointed to the right information, and actually putting in the work, Mike has been able to make his first withdrawal, $2,500. It's pretty respectable for someone that has not traded for more than 3 years. Most people can't make that in a profitable sense ever, right? Let alone go full time. But a lot of students are on their way to do that. And, we've been playing a small role in that. You guys do the work, so you need to take all the credit. But having people there to keep you on the rails and keep you focused on what really matters and shows you the process that actually works, it's priceless. It really is. It pays for itself. But yeah, so with this decline in here, I do still believe that, again, if the yields are going to keep going higher, at the moment with the DXY, there's not much to think bullish about. We'll see if that changes. But for now, I wouldn't be surprised if this similar thing happens in here. And then it just keeps continuing to try to do this type of stair-stepping behavior. Power 3 potentially, maybe it'll do something just like this. But we're gonna have to wait and see. We do have this volume imbalance in here. So we'll see how it wants to treat that. But yes, as long as this continues, right, and it doesn't break, I'm going to need it to literally break up through this to really be able to be longer term bullish. We're going to have to just wait and see. If we go to the 2-day, 3-day, there is an order block in there. It's pretty much this up here. So again, there's a fair value gap in here. There's a monthly inversion fair value gap. There's a volume imbalance. There's a wick in there. There's an order block in there, and then there's a swing high. So if you're taking my 3 PDA rule validation principles, we're gonna have to require it to get all the way up here in order for us to be longer term bullish. Because right now it's clearly bearish. We've now respected this bearish breaker, this bearish order block to the tick. Okay, has not even attempted to get up there. There's a cracking correlation between the bonds and yields, so that just tells you that you're in a low probability condition. Markets being symmetrical, meaning that their correlated reactions or correlated relationships, if they're cracked in correlation, that's the first stage in high probability, right? And if that's not present, then you got to cut your risk. Otherwise you'll pay the price and learn on your own whether you should do that or not. But I recommend that being the case. It's just something that protects you, and it'll serve you well. That's for sure. Because a lot of times, if you look back on your trading and you took losses and the market was just hard to listen to, or hard to gauge where it was going, many times it was a correlation problem, or a big news event, or you're in the summer months or whatever the case may be, basically getting caught in the manipulation or a bad condition, right? That requires more of a nimble perspective, right? You can imagine that if you go into a consolidation looking for, this type of price run, you're probably going to get eaten alive, and then all of a sudden it'll go. But yeah, outside of that, I do believe that this will probably continue because it's the start of the week. You always want to expect possible runs against something like this big displacement. This was a pretty large displacement. So displacement or large ranges lead to, let me know in the chat, what do large ranges lead to generally? And what do small ranges lead to? Just type it out in the chat. It's always a good reminder. Whoops. Large to small ranges, small to large ranges. Exactly. Exactly, Fritz. So with that being the case, we may see this kind of stall out a little bit. Again, we're moving into the next quarter. The new quarter is going to start within this coming week. So, a quarterly time frame being like a 3-month time frame, that has power 3 as well. We talked about this quarterly fair value gap being tapped into as well. And then that response kind of led us to trying to see how deeply DXY would run, how the response would be. So we do have a quarterly low here. We do have a quarterly low here below this low here. So definitely want to keep our eyes there. It may take a little while to get there, obviously. It's not going to happen overnight. The next quarter may look to target that though. Because if you took this 3-month chart here, right? If you took this 3-month chart, I want to look there as well. Yeah. Let's actually just put that there too. So we've got 2 quarterly lows. So if you looked at this like the 5-minute chart and this happened, we would have to break above this candle here, the 50% of this, to really be encouraged that it's going to reach these all-time highs, right? These new highs up here, or these deeper highs. Also, this fair value gap has to be inverted. So far, it just still looks like it may even get so weak, so interested in sell side that it could get down to this level down here. That's obviously a long ways away. These are relatively equal lows. So maybe next year is going to be a bearish year for the DXY. We'll see. But so far, we have this quarterly reaction here, and we got the quarterly low there and a quarterly low here. We do have a run on stops, shift in market structure. We have an order block, a bearish breaker, and a fair value gap. So, and price is now distributed, right? So it accumulated, manipulated, distributed. Now we're in a phase of basically rebalance, retrading to the fair value gap. And then we may get redistribution that then sends price down into, some of these lower lows down here. But we'll see, right? That's a longer term view. We definitely spend a lot of time on this type of perspective when we start a new year, just to kind of get a feel for things. Also, we do this every quarter. It's literally the new quarter next week. So, we're mixing that in today, at least for the next couple assets, right? So again, we'll see really what this wants to do in terms of response when the new candle comes out. We're gonna have this wick in here. Okay, so new quarter comes out. We'd have to monitor this quarter's wick in here, the quadrants, and then treat it just like we would on the lower time frames, right? We would have to see the 50% in here, okay, and then try to make sure that price can fail to get up there, because that would be, a very, very strong indication that we're going to go lower, right? The wick being respected on this quarterly time frame, that would set the sentiment for me. If we do fail, right, say it runs up, hits like the 25% and then displaces and starts to come close to this low or even blows this low out, that would be very significant for the whole entire quarter. Quarters are 3 to 4 months. So that's a narrative, higher time frame wise, for the next 3 to 4 months. What overall is price favoring? And that right there, what I just mentioned, those little pieces of information would literally be enough for me to then trust long term that we're probably going to target this maybe for the next 1 or 2 quarters, depending on how excited they got. This all happened in 1 quarter. So that very well could happen here too. And again, this is also the YouTube model. It's also a breaker. It's also a bearish order block, right? It hasn't necessarily got to the bearish order block, right? But regardless, if this was the 5-minute chart, it doesn't change the way we look at this on the 3-month chart. It's all the same stuff. It's just scaled to larger size or a larger amount of time interval. Same principles though, okay? And then you think of yearly power 3, right? Look at what happened here. January happened here, right? We had the open. Price rallied up above the open, hit a monthly fair value gap here. Okay. That was the manipulation for the entire year. And then all it has done from there is decline, right? And then another bearish power 3 here. And then now we're at the end of the year. So if this whole range in here, from this candle to where we're at now, that is the whole entire year. You could see that there's 1, 2, 3, 4 quarters in a year. The first candle gave you the accumulation manipulation of the year, the first quarter, right? And then it declined, started the expansion. And then the second quarter of the year continued that expansion towards the quarterly fair value gap. This is an analysis that we did this year to basically frame this whole entire drop and then how I'm treating the end of the year, right? Using power 3. And then, this we already basically fulfilled this large time frame fair value gap. What happened? What do I always say when price is going in a direction and it hits an opposing PD array? What do I tell you guys? Let me know in the chat. It's a very important point that I'm trying to make here. But what happens if we're bearish and we hit a higher time frame bullish PD array? Say on like a Friday, you know, consolidation. What else? If you're looking at the weekly range, what happens generally on Thursday and Friday if a higher time frame level is met? Like, or if we sweep a higher time frame liquidity pool and price has been accelerating. Yeah, retracement. Exactly. So what has happened within this yearly range? Right? The first quarter started the manipulation or the accumulation manipulation. It was very quick start of the year. And we also kind of reached into a PD array, that monthly fair value gap ahead of this, but it just gave one accumulation manipulation above the open price, started the decline. We gave another decline. It hit the higher time frame PD array, and then it started to reverse from the last quarter before this one that we're in, and then the fourth quarter, right? And so that started the retracement. So this yearly candle here looks like this. So far, with a wick above and then a wick below, and this was a bearish candle, right? And we're basically stopping at this quarterly fair value gap, which is also a daily bullish order block. You see what I mean? What the candle looks like? This line here, this high to that low, we literally just mapped out what the yearly candle looked like before even looking at the yearly candle by mapping out the 4 quarters and classifying each quarter with its characteristics based on power 3. Accumulation, manipulation, distribution, and then a lot of times the close of whatever range we're looking at, like what happens on Thursday and Friday for a weekly candle. It's like what happens on the last month in a monthly candle. It's like what happens in the last session or the last portion of the session, last portion of the 24 hours going into the final session before the day closes, how it generally, can look to cap the daily range, how the last 2 days, Thursday and Friday, caps the weekly range, the last week, how it caps the monthly range, and then the last quarter, generally, how it caps the yearly range, right? In this case, sometimes it's the last 2 because, it's basically hit the higher time frame PD array already. With this one candle, it already delivered so much into this. And they basically been going back and forth, balancing out the range. Kind of it hit a higher time frame PD array, a longer term target. And so it's been stalling out. That happened going into the third quarter. And then now the fourth quarter's happened, and we're still kind of using, a lot of the price action and liquidity that happened in the third quarter. Revisited liquidity that happened in the second quarter of the year. And so you could see the yearly power 3 in full effect, how the first quarter accumulation manipulation sometimes bleeds into the distribution, just like how Mondays sometimes can start a move for the weekly candle, but then it continued through the second quarter, and the third quarter is when we already hit the PD array. So what happened? This quarterly fair value gap has pushed price higher. It's been very back and forth. And even though these have been indecision candles, we're still able to call the market every single week. Just because it's looking like this doesn't mean that probabilities fall off on those lower time frames. Clearly, we're able to take this context, have a bird's eye view of everything, so we can be on the right side of the market, but then still find things to engage on those lower time frames relative to the monthly, weekly, daily chart within this whole idea of power 3 on the yearly chart. Right? So yeah, if you've never thought about things this way, and you start to think about things this way, or you like apply this, you're going to see massive clarity as you get better at using it. You know, it's going to keep you grounded. That's why we spend the most time on the higher time frames. As ICT says, we should. You know, that goes over everyone's head all the time. But where does ICT spend the most time? On those higher time frames. And he has said it out of his own mouth numerous times. So yeah, you want to focus there. And it takes time to get used to that. You know, so expect that it may take a little bit of time for you to get comfortable with this type of stuff. Obviously, you don't have to do this. This isn't something that'll make or break you. But if you want accuracy and consistency in terms of calling the market the way you've seen me do it publicly, this is a huge component of it. I live on the higher time frames. That's how I can't get faked out. And if it, doesn't do what I want initially, we're still able to get back in line. And we're never thrown off of what price is doing, because we always revert back to the higher time frame. And then we can trust what it's actually doing overall. And then we just simply wait for it to get in line with that, unless something changes on these higher time frames. And that's how you stick to narrative. Okay. So yeah, hopefully this is insightful to you. But I figured that this would be something important for us to talk about. Oh, and also for the indices, I got to mention as well, we called the low of the year accurately, effectively. And then, from that point, we've literally called bias and narrative 90 to, well, it's like exactly 93% of the time. I have to go double check, but it's high 90s, right? Well, I guess that's like lower 90s, but 90% of the time, like really, even if it was 80% of the time, who's doing that other than ICT? Like, but I'm not here to toot my own horn, right? So yeah, hopefully this makes sense. Let me check. Yeah, it's also, yeah, exactly, the yearly bullish order block. Exactly, it's just accumulating in that bullish order block. So it's hit the PD array there. We're stuck between this yearly bearish order block and this yearly bullish order block. So we'll see how it treats this yearly level in here. Let me actually map that out. I think I'm gonna make the yearly colors orange. Yeah, so we'll keep this in mind too. See how that wants to behave when the time comes. But yeah, so let me know in the chat if what I just laid out for you makes sense. So I tried to make it as simple as possible to understand what I just talked about, and how it associates to Power 3 and how effective and how useful and how common and how much you're going to use Power 3. Like, it's not something that you just learn real quick and then move on. Like, you need to spend a lot of time with it. It's literally something that, you could simply just use Power 3 and that's a model. If you have like an execution, like on an order block or something, and you have a time when you're going to enter, you could literally just use Power 3. Like, if you wanted to keep it as simple as possible, literally you could use Power 3 every single day. Unless it's consolidated going sideways, then you kind of got to adjust. But even then, it'll still put you in the right, put you in a good position. As long as you don't overtrade and over leverage and be a crazy person. Absolutely. Okay, it's the same thing done over and over. It just takes, yeah, just exactly, Tony. Exactly. That's exactly how you want to look at it. It's all the same stuff. Every single ICT concept is fractal. So you just look at this chart on the higher time frame as if it was the 5-minute, as if it was the 1-minute chart. It's the same stuff. And as far as macros are concerned, when price should go, I've mentioned this before. You use the news. the red folder news events. Yeah, it's a big ship, exactly. Like we've talked about. It takes time for things to change, a long time, just like how it takes a lot of time for a big ship to turn when it comes to bias and narrative, right? Well, narrative specifically. Bias can fluctuate in and out from bullish to bearish every day. Like in this is a downtrend, but it's been bullish a couple times, right? Bullish a little bit, just simply to set up probably, at least from what we're seeing, potentially further sell side delivery. So yeah, and then we got this quarterly fair value gap in here too. So we're going to want to definitely keep tabs on that. See how this respects the fair value gap. We are in a range. You know, again, we're at the end of the year, right? So again, the 4 quarters, hopefully I just laid that out clearly. You guys are saying that it makes sense, so that's a good thing. But yeah, that's the type of time that we're on right now. And the new candle is going to form. When we switch over on bar chart, when the open interest overtakes the current contract, that's going to be when it's time to switch over. And then we'll start thinking power 3 for the quarter, because every quarterly candle has a open, high, low, close, open, low, high, close, right? So it's the same thing. This was a bullish power 3, but it's a very nasty bullish power 3, somewhat indecision candle. Same thing here. Does it have a wick though? Does it have a high? Does it have a open and a close? Yes, right? This one doesn't have a wick, which is interesting. It was just all downside on this quarter here, which again opened up the floodgates to buy side delivery in the indices, right? But yeah, so every quarter, every time a new quarter starts, right, you take the month that it starts in and then you drag that over, right? You drag that open price over. And then you get your quarterly power 3 reference, right? And you study it over and over and over. Study every single quarter. You know, take it from this time frame down to the daily time frame and see how it looks each quarter. Map them out quarter to quarter. I might make an indicator that highlights the quarters. I got some ideas for indicators working with my private group with. But yeah, we'll see kind of, you know, what I want to introduce next year. But yeah. So as far as what I think the DXY is going to do, we're either going to stay stuck in this, or we're going to try to attempt one more time to get up here and then maybe collapse and, you know, try to drop down even further. Okay, we do got this yearly fair value gap. We're kind of respecting the upper portion of that yearly fair value gap. So if it was to break outside of it and then use it as support, that would then set the stage for us to potentially get an attempt through the 50% of this. But then again, we have to watch what the response will be from this, right? But this yearly fair value gap, it's basically balancing out this range. Okay, and this takes a lot of time, obviously. It's going to take a while for all this stuff to unfold. The most near-term targets, like I always talk about, when you're on any time frame, especially the higher time frame, the first liquidity is this and close proximity PD arrays, the high and the low from the current and the most previous candle. So we got the low here, we got the low here, and we got the high here. Even if it reaches up into this, we have to get here first. Even if it reaches down to here or down to here, we have to get below this low first. So these are the 2 liquidity pools that are the most important at the moment. And then, of course, overall, larger context-wise, we can consider this order block, the fair value gap. It should act as a balanced price range, so we should not come back into this. So if it does displace and looks like it wants to blow this out and it inverts this yearly fair value gap, comes back down into it, and then maybe decides to run against this, then, you know, that'll be pretty solid for potential long-term bullishness. But we're going to have to wait and see. For now, I'm going to look at this as a run on stops, shift, YouTube model, 2022, sell-off, and you know, maybe we'll be able to get down to levels like this too, but that'll come later, and we'll be on top of it when that time comes. But yeah, so I'd like to see this new quarter open up, try to fail inside this wick, give us that fractal high inside this fair value gap, inside this bearish breaker, inside this yearly bearish fair value gap or bullish fair value gap, and see if we can't reject the high up here and then try to keep going lower, targeting the lows down here. Okay. So does everything make sense so far from the higher time frame power 3, how to use the quarters in terms of determining power 3 for the year, how that is important, why that's important, how to the different characteristics from each quarter, and I literally just proved to you that this is actually what's going on. So next year you're going to be able to think about things in this way. Hopefully this gives you guys another layer of advanced top-down analysis, right? Explained in a simplistic manner, you know, because I'm not Einstein over here, right? I just know what the hell I'm doing. Okay, Fritz said it does. Okay, cool. All right, Fritz, I'm gonna take your word for it, brother. I'm taking your word for it, bro. But if you guys have any questions, let me know, okay? But yeah, so just one last glance down here on these lower time frames, or the higher time frame, but lower to the quarterly. Again, I'd like to see if this can take place. Again, we have this yearly fair value gap. We have the extreme high and extreme low down here, okay? So inside this range, right, we do have other liquidity that's more close to price. So we got the current candles high, current candles low, previous candles high, previous candles low, and any close proximity PD arrays like this low, like this volume imbalance, like this monthly inversion fair value gap, and then like this low here, right? The run higher, drop down. This whole area should act as an order block. Should be able to act as a balanced price range as well. So if price was going to break outside of this, we'll start to see if there's an argument to target the highs up there. And if we break this high, you know, we may be seeing early signs that we will target the extreme high. But otherwise, again, I want to see something like this happen, right? Either this or it attempts, can't even get beyond this, and then just fails and starts to crumble, targeting the lows down here, or it'll consolidate. I need this high up here and these levels to be broken to be bullish, so I'm not even considering. Okay. So yeah, hopefully that is plain enough. Moving on, we go to the currencies here. So if the DXY keeps declining, what do you think is going to happen in these assets? They should continue to rage higher, leaving behind balanced price ranges, breaking through up candles. We should be able to continue to see price start. We should continue to see price raging through to the buy side. Let's see. Okay, so again, we got this weekly wick on the euro. You could see that the euro and the GBP are very sensitive to the DXY. A lot of times they are more sensitive than the indices, but they still do. It's still useful to use the DXY when you're looking at the indices as well. They just may not be perfect all the time, but the sentiment wise, risk on, risk off wise, overall market symmetry wise, it's good to use it always. And most of the time they're reverse. So is the euro like ES? No, I think that they're kind of similar, but the euro is definitely, for whatever reason, more attached than the GBP is. Sometimes the GBP is like NASDAQ. I guess you could look at the euro like S&P and GBP like NASDAQ. I guess that's a reasonable comparison. Yeah, I think that's like identical comparison actually, because the euro is more attached. We could classify that as overweighted, right? And just like the S&P has like 500 stocks versus the NASDAQ that has 100, it drags it, you know. Purely because euro is closer to the, yeah, euro is closer to the highs. We'll see. We're still in this huge range, and there's a lot of turmoil in Europe with wars and everything. So not too sure if it's going to do anything too significant. And again, we've had this SMT, we've had this balanced price range in here. We do got this weekly bearish order block that it's stopped at. If in this bullish trend, what is this higher time frame order block? What is this weekly order block, right? If we're bullish and we're hitting this order block, what is that? Is that with the trend or is that against the trend? Is that an opposing PD array or a PD array in line with the bullishness? It's an opposing PD array, right? So what happens? It should stop there, at least like a speed bump, at least, and then trigger in a counter trend idea. But yeah, those of you that have been paying attention to a lot of that, to those types of topics I've been talking about, I mean, I've literally given you a model on how to frame counter trend trades. I've given you models on how to frame and confirm like trending days, like how to continue to trust buy side or sell side trends. Like if I'm just thinking about it, I've literally talked about so much stuff this year. It's literally insane. And for those that have listened, like you, Fritz, like Tony, like Mike, like everyone in my private group, all of you guys have been seeing some crazy value. I've been very impressed. I got to say it again. I've been very impressed with the things you guys have been doing. It's been really, really fascinating to watch. I think I've gotten even more effective over the years at communicating the important elements and trying my best to minimize the problems you guys have and, get you guys to accept the truths, in the market. Like for example, 1 to 2 trades is enough per day. You don't need 20 trades in a week. You really don't. And if you do, that means that there's a confidence problem. That means that you're not selecting the right opportunities. And that's where the focus has to be. Let me see. Fritz said, what does the closing quarterly candle show us in terms of power 3 on the currencies? So you count, right? 1, 2, 3, 4 quarters. Look at that's January 2nd right there. So you could see it's been bullish for the euro, bullish for the GBP, and the DXY has been bearish. So it's kind of telling you the same, but the opposite of what the DXY showed. Right? We're inside of this bullish order block. Got a fair value gap down here. Maybe the euro wants to try to come back down there, but we're respecting the wick in here. So I don't believe it's really going to have to come back down to that. I think that this is pretty nice. It could drop down, try to take this out. I'd prefer if it's going to be longer term bullish and look to target these highs up here on this higher time frame quarterly perspective. It's going to have to respect the 50% of this here. Looks like it is so far. The wicks do the damage, the bodies tell the story. So they're holding up. And we got SMT here on a quarterly basis, which I already have outlined. Where is this SMT happening as well? It's happening inside of a higher time frame PD array. So what does that tell you about that PD array generally? Especially if you're already in a trend that's, in this case, going to the buy side. What does that SMT tell you when it's happening at a higher time frame PD array? You guys know? Respecting the higher time frame narrative. What else? When there's SMT at higher time frame PD arrays and you're in like a trend, what else is it telling you about that PD array? Respecting the higher time frame narrative, it's definitely part of the context. But what specifically is it telling you when it does something like this at a PD array that you're expecting to, in this case, continue? What does it tell you about that PD array generally? Should not return to it. Okay. What else? I guess you kind of got it in that first response. But instead of the overall narrative, because that is obviously a part of it, what is it specifically telling you about the PD array? If you got SMT that happens and you're expecting price to go higher, if SMT happens at the PD array on the higher time frame, that should support price. What is the SMT generally telling you when it aligns like this? Because there's SMT everywhere. How do you know if it's going to be valid? But yeah, the SMT happening at a higher time frame PD array like this in a bullish trend, it's showing you that it's respecting that, right? It should respect that PD array. So like I said, you were essentially right over the target saying it's respecting the higher time frame narrative, but that's kind of like a broad statement. Specifically, the SMT happening at the PD array, this higher time frame PD array here, in a bullish trend, that type of phenomenon happening is showing you that the trend is still continuing probably, and that PD array specifically can be trusted to be respected. And so things should continue unless that was to be disrespected and it closes below the 50%. Then it turns off the trend entirely and you have to start looking the other way. Right? Or it turns off that PD array. So it may be looking to go a little bit deeper to something else. Right? So definitely keep that in your notes about SMT, you guys. But yeah, so with that being said, nothing's telling us anything about the opposing view to go lower. The only way I'll be bearish is or start looking to potentially be bearish and look at the lows down there is if we can get down below this fair value gap in here, which is also a BPR. Why? Because it's got a fair value gap and then an overlap fair value gap. We got a beautiful respect to the 50%. And we also have a beautiful, literally a perfect response to this upper portion of the fair value gap. I mean, you can't get any better than that. That's perfect, literally. And so we got trendline liquidity up here, which I've had marked out for weeks as a possibility if it was to get above this. So long term, that's been also correct. And then we got this weekly bearish fair value gap, or this weekly bearish order block here. So we're going to see how aggressive it's going to be in terms of a response from that level. I don't think it should be able to hold very strongly, especially with extreme bearishness in the DXY. So yeah, we'll keep monitoring that. But otherwise, I'm going to keep assuming that it's going to keep trying to target this. Then maybe we even get excited enough to get up into the to this wick up here. But we have all this to blow out first. Another thing too you want to watch this fair value gap. If we can get above that again, because it got above it once, if we can get above it again, that's going to be used as another dynamic support level. So once it gets above that and closes, I don't want to see it at all break back down below this. Maybe it wicks a little bit, but on a closing basis, we should be able to stay closing above these types of levels when price is moving like this, okay? So yeah, that's my opinion on this asset for those of you that trade currencies. I mean, I've been calling currencies just as accurate as I've been calling all the other markets. All these markets that we're talking about, we've literally been calling them every week. It hasn't just been one. It's been every single one of them. But sometimes the bonds and yields have been off in terms of correlation. That hasn't stopped anything. It just makes it so we have to lower our risk a little bit because it's not a perfectly ideal market. in terms of the condition. But the volatility's been there. We've been able to call numerous opportunities, point out numerous scenarios that played out literally perfect. I mean, you can't get any better than a lot of the things that we've done this year in terms of calling the market where it's going to go. So hopefully that's been encouraging. And hopefully you guys have been improving. You know, I know a lot of you have, but hopefully that continues. If you stick around, you're going to have no choice but to have that continue. So, you know, whether you like it or not, being here will have a positive impact on your trading, right? Whether it's in this environment or in my private group, you know, you're all getting unrivaled value. So hopefully you see it that way too. So yeah, on to the next. So let me actually, I'm gonna do just like a pure analysis on this, and then we will talk about stuff on the other ones. Okay. Let me actually. Sorry, I forgot to do this earlier. Yeah, I think that's it. Yeah. So, oh, wait, whoops. Now I gotta go. YMCA? What the hell is that? What? That's interesting. I'll move them up when the time is right. Yeah, sorry about that. I definitely wanted to do that before I forgot later. Thanks for bearing with me. But yeah, so looking at this asset, if we move to quarterly time frame, now that I think about it. Yeah, we're basically still near the all-time highs. So what I do see here, we got this wick in there. It's a really large wick. Pretty large wick. We got the gaps up there still. Yeah, let me just place this real quick. Right, so the only thing on that monthly chart that we have is that monthly wick. because it's already been really aggressive. And now that we're pulling back into this, if we take the 25% there of that monthly wick, we're basically tapping into that. We're not only doing that, we're also leaving behind or tapping into the weekly bullish order block. So we got to watch that. And if DXY is going to keep declining, this may have literally just been a liquidation event to tap into something like this weekly bullish order block. Wouldn't be the first time that they did this massive type of drop that leads to a buy, right? I don't think that we're going to make all-time highs. I think it's going to take a little while because, again, when we start a new year, what happens? Consolidation, manipulation, just like how it did this year, right? How the start of the year had SMT and then just rapidly declined all the way down to a yearly bullish order block. And then we picked a low. As we called the sells, because of all the Trump hysteria, people thinking that the world's going to end, they used him as an excuse to then tank the market, make everybody scared, make people think that he was destroying the economy and all this stuff, make people go on a rampage, like, losing their mind, selling their assets, while smart traders, smart investors knew that he was just being used as an excuse. He's, a lot of times good for the economy, argument to be made apparently, but, it's neither here nor there. The clear element was the fact that he was used as a smokescreen, as a fall guy. ICT has said this before, and anytime that Wall Street wants to use him as that, that's what they're going to do, which is, it was on full display this year, whether you love him or hate him. There's been some good things, some bad things, but everything has been used in a way to manipulate the market. It's very, very interesting. You got to keep your ears to everything and know what's going on. Because, just like FOMC and NFP, you don't want to be caught, not knowing that stuff's going on. Same thing with this, especially if everything that he says moves the market, just like Powell. You always want to be cautious about that and understanding about that. But yeah, so this has been a really rapid decline. So with that being said, we got the daily order block. It's been invalidated. And we've inverted this daily fair value gap that's been used as a support level for so long, built up liquidity. And so they purged that out. We've also swept out a previous week's low here. And then we have an extension level from this high down to that, this high to that low, right? So this high up here to that low. And then, let me see, this high to that low. So we extended that, and it has this special area, 2 to 2.5% retracement level or extension level. Not retracement level, extension level. Generally, this is an extension portion of price action with the Fibonacci that, for whatever reason, very commonly is used for a retracement. Like if you're projecting a range for like a breaker for, basically a breaker, or just any projection related to, a high being created, a low being taken, and then you're, mapping out that range for projections. Anytime price reaches into this 2 to 2.5% or standard deviation extension level, you want to go in there and observe how price almost always has some type of rejection to that. Maybe it's a speed bump reversal to then continue. But then that's the same thing for the 4 standard deviations, 4.5 standard deviations. Both of those levels very commonly have a retracement happening. And don't take my word for it. Go in there and look at it. It's fascinating. But it's something that constantly happens. So if this is going to be sustained and go lower, we have these levels down here to target. I don't believe there's enough evidence right now to really justify that, especially when you look at the weekly chart. I mean, it just simply looks like a retracement. Something that could be of concern for this to basically, for this to basically not continue going higher. We got a very similar situation to the start of this year that had an SMT at the highs before it took a nosedive for that first quarter. Okay, so we got a very similar characteristic here with the higher time frame SMT that's going on. All right, so yeah, this is definitely something we're keeping in mind just in case. I can say too that if we break down below the 50% of this order block and we close below it, we will then target these relative equal lows, and then we may even get price to come down into levels like this. Levels like this, and then we also got these relative equal lows here for longer term sake. We're gonna have to obviously remap all this stuff out because the new quarter that comes in, or the new contract month. But for the most part, these are definitely important levels going into next week, just to kind of encapsulate everything that we're looking at here. This has been a huge range. I'm expecting, because there's NFP, FOMC, and CPI tomorrow, or not tomorrow, but next week. It's going to be some fireworks. Something big is going to go down in here. Okay, it's either going to fully give up the run higher and then go off this SMT and then start to really ramp lower in preparation for next year. Because remember, accumulation, manipulation, and then distribution happens later on. So I wouldn't be surprised if they did want to come down here, maybe take all these people out. And then, later on, maybe even when they reach this level, if they were to get down there, maybe use that as the potential low of the year and then start a run from there, going back to the buy side, if they do choose to go to the buy side, if everything continues to be improving in the economy and whatnot. But I wouldn't be surprised. So the way that we get back in line with trusting buys is if price can displace and get back above this, right? And anything to the short side, near term is going to be short term in nature. Okay, so we're going to have to wait and see how it's going to reject this and then see if it can hold that. If it does hold that, we're set to try to target things like this wick, the gap in here, maybe even come down and try to attack this gap down here at some point. We have each of these lows. So yeah, we will keep that in mind. Let me move this. We do have this here. We have a high, a low, failure swing. We do got relative equal highs up there. We have SMT there. Not only there, but we also have it with this high and this high. And with the Dow. The Dow's making all-time highs. So we got big SMT above these highs. Again, I wanted to see if this could be targeted last week. It did not allow for it. Right? It didn't allow for it. I mean, if this would have happened by basically taking the highs and then rejected aggressively, it would have been a little bit more reasonable to frame this out as a reasonable retracement potentially. But it failed, right? And it was just stuck, and it ended up creating a Thursday reversal profile basically targeting these lows to liquidate people from this area. So from this time frame, right, from this 4-hour chart, we do have a fair value gap in there. So that's definitely going to be a level of concern for me. And again, if we can break back above this level here, which is that daily fair value gap, I'd say if it was to get back above this and then look like it wants to use it as support, that would be something that I'm interested in seeing hold, and then we would then continue to target the buy side. That type of delivery, overlapping this fair value gap, retrading it to the buy side, using it as support, would be justification for this order block here on this weekly chart, sending price back to the buy side. So this is what the weekly chart looks like. And in order for that weekly chart, in my opinion, to visually be continuing to confirm that it wants to go higher, we have to adjust above this high and then use it as support. And then in that case, I'd be able to then try to frame something out fairly confidently, targeting the rest of this gap up here. All right, we already got a little bit of it, but we still have a decent size up here that's still left unavailable. And if we go to the regular trading hours gap, or regular trading hours, we could see the gap that I'm talking about right there. I've been talking about this for weeks, and we finally got up there a little bit, left equal highs, but then it kind of just came off the high. People probably think that's strong resistance, so we'll see just how strong it is. And again, we confirm that it is going to get up there, and we could look to take buys confidently when it overtakes this fair value gap, along with this one as well. We got this weekly wick. That weekly wick was this level here, so I'm going to actually move that. Move that to there. So now we're going to use this wick here. Okay, so 50%, couple that with this weekly bullish order block. I want to see if we can't get price to move up into here potentially. But again, the contingency plan will be basically if price comes up into this one more time and then rejects it, we're going to have no choice but to look at this as a shift, an order block here, a potential mitigation block, high, low, failure swing, displacement below the low. We have SMT at the highs. So those things will kick in line in terms of super valid to go lower if these levels get respected. And then, of course, if that's the case, the targets we could then try to consider are things like this. It's a previous daily low. And go levels like that. Assuming that it wants to dig lower. It may not, right? This whole thing may just be a simple retracement to the larger order block on the weekly chart to then try to push us higher. We got this bearish order block and this bullish order block that we're kind of trapped in between. So we need to see what's going to happen with this too. So we also got this order block and this order block. So is it going to open up, run up, respect this, and then decline? That would be supported by this order block here, pushing price lower, especially if DXY was to turn around and go higher, with the bonds going lower and the yields going higher. That would be supportive of this. It'd further amplify this going lower. But again, if DXY keeps dropping and then the bonds turn around and start going higher and the yields end up rejecting this level here, and then DXY continues to go lower, we'll be able to then try to get in line with a potential bullish run with the indices. Okay. So yeah, and then let's just take a quick glance at the other three. Let's got an order block here. We got an order block here. We got SMT at the lows down here, if you notice that. SMT right there. But then again, we have SMT on the larger view. So that's something that we definitely gotta keep something that we gotta keep tabs on. But yeah, I don't really have much more to say about the indices. We got this wick in here too. So if price declines into that, we'll definitely have to see how that's going to behave. And as long as it stays above at least the 50% of that wick, we're still in bullish order flow. Right, and then if we jump to this, for gold, we can definitely see we've had this pretty strong rejection in there. But we still got these equal highs. I'm very much on the side that this is going to keep going to the buy side. Will we perhaps look at COT next week closer to the... Yeah, potentially. When we're inside the rollover, it's never good to look at COT because it's going to be very skewed and inaccurate. You want to wait at least a week after the rollover, because then data is more accurate. It's more solidified. Sorry about that. But yeah, so those of you that trade gold, I'm very much so looking to see this continue. I think it's going to get up to $10,000 if you ask me. I've been saying this for the last couple of weeks. I think that gold is going to finally be let off the leash. It's been on a leash for decades, and I don't think that's going to continue, honestly. Countries are buying up so much gold. There's wars happening all over the place. I really don't think that this is going to be too... I don't think this is going to be something to be too worried about with it not going higher. I do see these equal lows here that are kind of interesting. So I wouldn't be surprised if they try to offset that, drop price lower, market maker sell model, maybe take this out. It'll probably not do that right now. You know, maybe it does. You know, by breaking down below here, that would confirm that it's going to get down there. But as long as this continues, we're going to continue to see this keep pushing. I think I'm going to trade gold a lot more next year too. NASDAQ and gold, I think. It kind of depends. I'm still making a decision. I like gold. Gold treated me pretty good this year. But gold futures, right? Yeah, it's definitely something that the volume is present in. So if the indices look like shit, gold hasn't been looking like it. Gold's been looking like the one. Gold has outdone almost every asset in terms of gains this year. Over 100-point gain. You know, it's just crazy. I was screaming buy gold when it was down here. I told my little brother to buy gold. I told a lot of my friends to buy gold way down here. And ever since, it just blew up. It's because of the wars, because of economic uncertainty. When all that stuff happens, commodities, they also have a supply and demand factor. So if there's a lot of crap happening in the world, and now the dollar's being talked negatively about, and countries are moving away from the dollar and buying gold, the supply is larger than the demand, or the demand is larger than the supply. The physical supply and demand factor is present in commodities, you know? So as a result, plus the uncertainty, gold has been flying off the handle. Okay. So it's definitely something that is very valuable. And I think it should have been at $10,000. It should have already been there. you know. So yeah, with that being said, I'm going to keep trying to see this go higher. And as long as it stays above this level, I think it will continue that. What is that? Oh, it's that for value gap. I'm going to also look at this high up here down to the low. This whole thing should act as a balanced price range. We got buy side, sell side, buy side, sell side, buy side, sell side. Rally up, return back down into the upper portion of this. We should stay above at least the upper 25 to 50% of this little consolidation. And we should be able to hopefully be able to blow this high out first. If it doesn't blow that high out first, and then it tries to come down here, it is going to blow this high out eventually so aggressively. It'd just be ridiculous. Next year's probably going to be another good year for gold. So I'm bullish, indefinitely bullish, like overall for gold and silver, especially silver. You know, silver is one of those things too. You know, you want to hedge against inflation, buy gold and silver. Not financial advice, but that's what I was told, and it's definitely worth it. That's for sure. So yeah, I guess that's pretty much all I've had to talk about today. This was something I was talking to my private group about. But yeah, is there anything else? I think that's pretty much everything that I wanted to cover today. Do you guys have any last minute questions before we wrap it up? Put a ribbon on it. Appreciate y'all for hopping on as always. Going to be another amazing week. Let's finish the year strong. Follow your rules. You know, you don't have to wait till the new year to start making new habits. So if you caught yourself over trading, over leveraging, breaking the rules, doing anything that you think has been holding you back, make it a goal to fix those things starting this week. You know, make it a goal to not overtrade at all. Be uncomfortable, right? If you take a loss, if you take 2 losses and you know, you're uncomfortable with it and you feel that urge to get it back, or I think I may have done this wrong or that wrong, so let me just go back in. Sit with that feeling. Start learning how it feels to just sit with it and be okay with it. Be like, you know what? I'll make it back tomorrow. Take it day by day. You know, this is one of the most difficult things to do. And making that fix that I just talked about, to not overtrade, to not feel like you have to make it back, those things are hard to do. You know, so take it day by day. You know, take one day where you take a loss or 2 and you may be feeling that issue or that urge. Just silence it and turn the computer off and come back later. Tell yourself over and over, I will be fine. I'm doing exactly what I need to do by not touching anything after I just breached the rules or met the rules. So let me feel how it feels to do this correctly. And then 20 minutes later, you're going to feel like, oh, wow, like I feel good. Like I'm glad that I didn't make it worse. Especially when you go and look at the market and then it's got like a bunch of consolidation going on. So yeah, take it day by day. Yeah, Fritz, what's your question, brother? What is the quickest way you identify session high resistance? Conditions daily session. Well, first of all, the best thing to do is look at what the candles are doing overall on the daily chart. If it's accumulating like that, over like back and forth, or if we're ahead of a news event, if we're like NFP, FOMC, if it's the end of the month, if it's a week before a quarter, All of that just in general, day to day, you want to look at as high resistance. A high that's taken like this, if you're expecting it to go higher, but the high's been taken first, generally that's going to promote that it's going to be high resistance. If there's like a failure swing though, that should be low resistance if it's going to continue. What else? Cracks in correlation can a lot of times lead to that. If it was a fast London session going into New York, you can expect high resistance or a reversal. What else? If you're in consolidation in general, right, that's going to be high resistance. If you're in consolidation at the 50% level, that's going to be basically low resistance. High resistance, low probability. Generally on Sundays, it's low probability, high resistance, accumulation, manipulation type vibe. If there's a Friday where we've hit a higher time frame PD array and there's crack and correlation, right? On days that there's no news, those are like automatic expectations that it's going to be potentially high resistance, low probability. Does that mean every single time in these scenarios it's going to be a bad type of movement? No. But a good rule of thumb, because we're in a probabilities game, right? So a good rule of thumb is most of the time we want to go into those types of environments and basically just identify that we need to drop our risk, right? Because it may be a more unfavorable day, unfavorable situation. Same thing if you see weekly candles overlapping, right? If it's just like nasty overlapping like this, every single week, most of those days is going to be a high resistance, low probability environment. Does that mean that you can't trade in that? No, it just means you're classifying it this way so you know to lower your risk and remind yourself that you do not want to overtrade in these conditions. Because if you do, there's more of a chance for you to really hurt yourself. So it's best to lower your risk. And if you follow the rules, the 1 to 2 trades a day, if you take a loss and you drop your risk until you make back the loss that you took, and you do this process every single time, everything will be, it'll work out in your favor eventually. Then it just becomes a numbers game at that point. Because what we do, it works more than it doesn't. We're able to identify things like good conditions, bad conditions, where price is going, when we could push, when not to push. But yeah, every single time you are going into a day before, a day of, or day after a holiday, a week before, a week of, a week after a quarterly rollover, Mondays, Fridays, depending on where we're at in price. If we're ahead of a news event, NFP, FOMC, CPI rate cuts, if higher time frame candles are overlapping when you're going into trade, if we're at equilibrium on the higher time frame, like when we're looking at the chart, if there's a crack in correlation overall, you could expect low probability, high resistance potentially. If there's, again, a high that you're looking to be to target, but it's already taken the high, right, and then reversed, right, like something like this, right? If it's already taken the high and you're looking for it to go back through it, it may result in high resistance. Why? Because there's already work that's been done. So it's not going to be in a hurry to get through that high. Versus where's a good example? There's a good bearish example. Versus something like this, right, for the bullishness. It did kind of reject it. But once it got back up there, what did it do? Low resistance, speed, right? And then again, if it's below, right, if it's targeting a low that has that failure swing type of behavior, all that's doing is accumulating orders. So then when it breaks through it, it's going to do it in generally low resistance fashion. Basically, a breaker, to get above the breaker, a bearish breaker, right? Like low, high, lower, low. To get back above that high, it's going to be high resistance, because a breaker is a high resistance signature. To get above, say, a mitigation block, right? Something like this here. Oh, wait, whoops. Oh, yeah, no, like this. This is a low resistance signature. Why? Because it's left liquidity. It's building liquidity, building the idea that it's strong resistance. Same thing if it's, something like this. Building up the liquidity. It's engineering liquidity. But if it was like this, and then we're trying to see price get down through it, it may have a little bit more of a hard time. It may still get down there, right? And it may do it in a reasonable time, but it'll be a lot less powerful of a response. It won't be like this a lot of the time, right? It'll a lot of times be like this, right? If this is what you're dealing with, right? If you're trying to get down below something like that, right? It may cause a little bit of a high resistance type of behavior, get down there slower, basically. So the expectation would be, you're going to expect a little bit slower price delivery, a little bit more back and forth to get down there, even if it does still get down there, because you could still be right, because we are rooted in the higher time frame. But when you see stuff like this, you prefer to see something like this, because that, my friends, is a low resistance signature. Especially if there's a PD array above here, like an order block, and there's like maybe a fair value gap down below, or maybe this took out a high up here, previous week's high or something, or previous day's high in London, and then we set something like this. The run below that should be rapid versus a run below something like this, right? It'd be a little bit more of a high resistance, because as ICT classifies the breaker and mitigation block, one is high resistance, the other's a low resistance signature, but they're both used for reversals as well. So yeah, hopefully that little list of things that I gave you guys and further context kind of helps you identify high resistance, low resistance. Is there anything else? I think that was a pretty good list of details about that topic for you guys. So, oh, god dang, dude, I keep smacking this thing. But yeah, so hopefully today's call was useful. Appreciate you guys hopping on and spending some time with me this morning. As always, hopefully you guys have a good rest of your weekend. Hopefully you guys got value. If you guys did get value from the video, don't forget to like the video, subscribe to the channel, spread the word, right? If you have people that trade that like your friends or anyone that and you think they could get value from what it is that we do here, or provide value in their own sense, definitely invite them. 2026 is going to be spectacular, just like this year was, and the years prior. So let's continue to grow, right? Continue to improve ourselves. Let's keep being here for each other and holding each other accountable. And, let's just keep elevating, right? So yeah, God bless you guys. And I'll see you guys here on YouTube on Tuesday. Those of you in my private group, I'll see some of you guys later today. But if I don't see you guys or talk to you guys today, I will see you guys tomorrow, bright and early as always. All right? So God bless you guys, and I will see you guys on the next one.